Future quality, which is how we define how we invest, and we only look for one type of company and those that meet that criteria, which specifically is those companies that will attain and sustain very high returns on capital in the future. In essence, there's 4 pillars that really support that thesis. Have they got a franchise? Have they got a management we trust to govern and reinvest capital wisely? Have they got a balance sheet that's appropriate to fund their own growth? And is the valuation of all that growth and returns over a minimum of 5 years not reflected in the share price? That in essence sums up what we're looking for when it comes to future quality. The 2 types of companies that make up what we call future quality, most of them are often already high return businesses that we expect to sustain and grow those returns over time. But also sometimes businesses that sometimes the market doesn't fully appreciate the degree to which they will improve the returns. And one example, say we own in our portfolio, something like Dolby, which we own, which is Dolby Laboratories, a business that spent a huge amount of R&D over the last decade to develop new technologies, which are only now beginning to come to fruition and resulting in an acceleration in growth of its business, back to double-digit growth in a business which is highly profitable. It's got no debt on the balance sheet, so we expect it to grow and improve its returns with really, to be honest, very limited impact from GDP or other things that may be at the top of other people's investors' minds. We're just interested in the bottom up, and does our company meet that future quality thesis? You know, ResMed has been a great business for many years, but we continue to believe that the solutions that they provide, particularly around about the connectivity of their devices, which is resulting in a world where people look for care and effective care in the home. And because of the software combination with their unique particular solutions, we think that makes them well placed for both market share and the growth in their product demand over multiple years. So hence, it's very much a high return business we expect to continue to be so. Treasury Wine was a bit different. You know, we first invested in that way back in 2012. A business spun out from a beer company where people had very low expectations for the industry, but we think there was a whole range of catalysts from the supply demand in the industry, the more effective utilization of its brands and monetize them in a more careful way in directing towards where the growth was in emerging markets. All those very long-term drivers of the business are very much what have come out to play in the recent years. Not without its hiccups, dare I say, over the years from the management and otherwise, but very much the existing management team is delivering those very same things we identified way back then.